There's a lot of news out there about the coming boom in the economy. What to do about that? Find out on this episode of Friends Talk Financial Planning. Hi, I'm John Scherer, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan Mermel, and I've got a fee only financial planning practice in Chicago, Illinois. John, a lot of people are talking about this. It seems like maybe people that got stimulus checks or PPP haven't spent them, and there's a lot of money laying around somewhere. Uh, what do you and so what are you hearing about what that means?
Yeah, no, it's interesting to have this conversation. I'm glad to know that you're hearing that from some of the people that you hang out with. I hear it from clients and friends. Like, I heard one person the other day says we were out walking the dog, and I said, "Yeah, boy, once we get back and can get out into the world, it's going to be like the Roaring Twenties again, And like, and then, well, what do we do about that? How do we change our patterns, our investing, or our financial planning? And I have one quick thing, two quick things I wanted to show on this is Wall Street Journals, right? This is kind of becoming mainstream. Wall Street Journal said pent up savings are expected to boost recovery, right? Like that sounds like pretty good stuff. And then this was interesting. We were talking about this before the show. I said there's an astounding surge in M2. And I said, I don't know what M2 is. And
M2,
yeah,
yeah.
and be right. And before you were explaining to me what it was, I'm like, yeah, it says right. I didn't really realize that. I don't remember economic class that well as you do. But M2 is what? It's the excess cash and checking and savings accounts, right? That's what that relates to.
Yeah, people
And
have a lot of cash, right?
right. And so look at this going back to 2003, and it goes through the roof, right? So there's all this extra cash on the sidelines. And so this idea of, boy, once we can go out and move about the country again, this is going to be awesome. And so what do you do about that, right? How do we change our behavior? And I'll tell you, for me, this relates to it's a signal, right? But it's sort of like we were talking before about when you put water on to make tea, and when that teapot boils, that's a pretty reliable indicator it's the water's ready to make tea, right? Like I know what to do
Right.
next, and like 99.5% of the time, it's ready to make tea. With something like this, it's an indicator, but I'll tell you, the fact of the matter is what happens going forward, it's really unreliable. It's unknown. And on the flip side of this, when you think about, if you look at the value of the market right now based on historical averages, price earnings ratio, or some of the other factors, stocks look really high right now. Like, stocks are expensive on historical norms, and unemployment's high, and the debt's going up, and inflation. And man, there's a lot of evidence that the market and the economy is in for a rough ride the next several years. And then we just looked at, there's also a lot of evidence that, geez, the economy is going to boom the next several years. And I will tell you, it's hard to predict, but what's definitely going to happen is one of those two things, right? It's going to
Right.
be great, it's going to be bad. We probably are going to be surprised whenever it
Or somewhere in the
happens.
middle, right?
Right. And so it's like, it's interesting, as I think about it anyway, that it's not actionable, right? We have to have a plan that provides for whatever happens, because the future is unpredictable. And if you're pessimistic, you think, golly, the market's overpriced and unemployment and all these things. Well, take a look at, zip back a little bit. Take a look at that. There's record cash on the
Right.
sidelines in people's bank accounts. And if you're of the nature that, so you say, hey, this is going to be the Roaring Twenties again, take a look at the other side. Stocks are expensive, right? And unemployment and those things, and have some balance. So that's what I tell people. I kind of get excited about, thinking about these two sides. And at the end of the day, I think you can't do anything. But what do you talk about, or what's your thoughts on this stuff?
Well, as you were talking, I was thinking about what I would do if it's the Roaring Twenties, and I actually have a flapper outfit.
I was hoping that was going to be that. I was hoping
And
Flapper
so
was going to fit into
and
that.
maybe I should invest in more flapper outfits, like, so maybe I should change my wardrobe to flapper outfits, headband,
I
armband,
like it. I like it.
uh,
On our next episode, tune
yeah,
in to see
a
Bridget.
lot of twirling, fringy things. Yeah. So, yeah, I think we just do what we normally do. We look at your income, we look at your investments once a year. If you want to invest some more, that's fine. We'll just put it in a big in the whole, not necessary. We're not going to do generally something special with it. We just, put it in the big pot, and stir it up with everything else.
Yeah.
So, yeah, I also think that the news is designed to help us to trigger our emotions and make us want to do something. And in these situations, that's what we're trying to do, is help people sort it out. And so I don't think that maybe my flapper outfit needs to incorporate M2
Yeah. Right.
somehow. I don't know. My M2 flapper outfit. Yeah. I don't see it. I see it as noise, not as signaling, let's make tea. It's
Yeah.
like
Yeah.
this. It's like my cell phone's making a tea kettle sound, not
Right.
it's
Right.
time to do something.
This stuff is interesting to me. I mean, I watch, we look at these things, and as you were describing, like it's the news is designed to get us to take action, right? And the best thing to do most of the time is not to take action
Right.
or not take a reaction. And it reminds me of Alice in Wonderland and the rabbit down there, and
Right.
it gets all fleshy. Says, well, don't just do something, stand there. Like right. Just listen, calm in the storm is what is successful. And I think that tea example, like when the teapot boils, it's time to make tea. This is noise, right? As you just said,
Right.
this is noise. It's something. It's worth looking at. It's worth considering, but it's not actionable. Having a plan
Right.
and sticking to it, that still is the thing to do here. And so, if we were to wrap things up, like that would be my one big takeaway: is think about this as the anti tea kettle boiling. And it's interesting. Pay attention. If you find yourself swinging from one side to the other, being overly pessimistic, being overly optimistic, think about the other side, because there is another side to it. But then stick
Absolutely.
to your plan. And if you're having a problem with your plan, think about creating or changing it so that it will be able to handle both sides, right? You don't know what's going to be a good year or bad year, good 5 years, bad 5 years. Have a plan that can weather all those things. So
Absolutely. So at the end, we'd like to talk about the ACP, or the Alliance of Comprehensive Planners, which is an organization that both John and I belong to, that has planners all over the country. It's a not-for-profit organization, and people are really joined by a philosophy of how they work with clients. And the other thing is subscribe. So hit the subscribe button. It helps us get some credibility with YouTube, and you will get first dibs on what knowing about our upcoming episodes. So
that's great.
with that, it's a good time to cut it out. Thanks, John.
Thanks, Bridget.